Welcome back to ZBCN Today, the channel where we cut through the noise and focus on what actually matters. We begin with a major institutional development reported by Cointelegraph on February 3, 2026. Fireblocks has integrated the Canton Network to support regulated Onchain settlement. This integration enables financial institutions to custody and settle assets on a privacy-enabled blockchain specifically designed for regulated financial markets. The importance of this announcement is not simply the technical integration itself, but the institutional signal it sends. Fireblocks does not partner casually. Its integrations historically reflect projects and platforms that have already passed regulatory, security, and operational scrutiny. In this context, Fireblocks' support for Canton represents validation of the network's readiness for production-scale financial infrastructure rather than experimental deployment. According to the announcement, Fireblocks has added full support for the Canton Network, enabling financial institutions to custody and settle assets on a privacy-enabled blockchain built to support regulated markets. The integration allows governed settlement of Canton Coin through Fireblocks' platform and its New York Department of Financial Services chartered trust entity. The offering is aimed at banks, custodians, and asset managers that are exploring tokenized securities, tokenized deposits, and other regulated financial instruments that require private settlement environments, permissioned access controls, and strict compliance frameworks. Under this integration, institutions can custody Canton Coin directly through Fireblocks, while applying the same enterprise-grade policy controls and workflow automation they already use for digital asset operations. At the settlement layer, transactions occur on the Canton Network, enabling institutions to benefit from privacy-preserving smart contracts while maintaining regulatory oversight and compliance enforcement. Fireblocks also operates as a super validator on the Canton Network, giving it a direct role in transaction validation and network governance. Fireblocks further stated that support for additional Canton-based tokens and applications is expected to expand over time, signaling that this integration is not static but designed to evolve alongside institutional use cases. To understand the scale of this development, it is necessary to contextualize Fireblocks itself. Fireblocks currently secures more than $5 trillion in digital asset transfers annually, and has supported over $10 trillion in total transfers to date. Its infrastructure is used by more than 2,400 organizations globally, including banks, trading firms, custodians, exchanges, payment providers, and financial institutions operating across multiple jurisdictions. This places Fireblocks not in the category of experimental crypto middleware, but among the core institutional rails through which digital asset value already flows at scale. The integration of Canton into this infrastructure means that Canton is now positioned directly within the operational stack of regulated financial institutions rather than outside of it. This development also reflects a broader structural shift underway across financial markets. Tokenization is moving from proof-of-concept pilots into live production systems where institutions require governance controls, privacy guarantees, regulatory compliance, and operational certainty. Rather than crypto networks attempting to convince banks to adopt open infrastructure, financial institutions are increasingly designing blockchain systems that replicate and enhance existing market functions while preserving regulatory alignment. Canton is explicitly designed for this environment, and Fireblocks integration serves as confirmation that the network meets these institutional requirements. The Fireblocks integration is not occurring in isolation. It follows a sequence of institutional developments that collectively position Canton as core infrastructure for financial market modernization. In October, digital asset infrastructure provider BitGo added support for Canton Coin, enabling U.S. banks and asset managers to custody the token through qualified custodians. This marked one of the first major steps in bringing Canton into regulated custody environments. Approximately 1 month later, Franklin Templeton connected its Benji tokenization platform to the Canton Network. This integration allows tokenized assets issued via Benji, including Franklin Templeton's Onchain U.S. government money market fund, to be used for collateral and liquidity within Canton's global collateral network. These developments indicate that Canton is being positioned not merely as a blockchain network, but as a settlement and collateral layer for institutional markets. The Franklin Templeton integration in particular demonstrates the application of Canton infrastructure to real-world regulated financial instruments rather than experimental digital native assets. The ability to use tokenized money market fund shares as collateral within institutional workflows reflects a direct bridge between traditional asset classes and Onchain infrastructure. Quantitative network data further reinforces the scale of institutional adoption already underway. According to RWA.xyz, Broadridge Distributed Ledger Repo, DLR, currently has approximately $178.1 billion active on the Canton Network. This figure reflects real production usage rather than pilot experimentation or proof-of-concept deployments. Broadridge itself serves as a super validator on Canton, directly participating in transaction validation and network governance. Its presence signals operational commitment to the network rather than observational interest. Everything you hear on ZBCN today is for educational and informational purposes only. Nothing in this video should be considered financial advice, investment advice, or a recommendation to buy or sell any asset. When this activity is viewed alongside Fireblocks' existing scale, more than $5 trillion in digital asset transfers secured annually, and over $10 trillion in cumulative transaction volume, the magnitude of institutional capital flowing through infrastructure connected to Canton becomes evident. Broadridge processes approximately $8 trillion monthly, while Fireblocks secures trillions annually, and Canton hosts over $178 billion in active assets. These figures collectively demonstrate that institutional finance is already operating on or adjacent to Canton infrastructure, not merely evaluating it. This structure mirrors other crypto-adjacent treasury strategies, such as Ripple's treasury alignment with digital asset infrastructure providers. In the Canton ecosystem, Theramune functions as a publicly listed vehicle aligned with Canton Coin and institutional blockchain adoption. BlackRock's disclosed position in Theramune, combined with its reported $100 million allocation into Canton-aligned exposure as of December 2025, signals institutional capital participation through both private and public market channels. While this does not imply directional price forecasts or investment outcomes, it confirms that large asset managers are allocating capital into Canton-aligned structures at scale. Taken together, these developments illustrate a clear directional shift in how blockchain infrastructure is being deployed across financial markets. Fireblocks' integration on February 3, 2026, marks another inflection point in the transition from experimentation toward institutional scale deployment. The network effects emerging around Canton, including BitGo custody support, Franklin Templeton tokenization integration, DTCC treasury issuance workflows, Temple Digital Group trading infrastructure, Broadridge repo settlement, Theramune treasury alignment, and BlackRock capital participation, demonstrate a convergence of market infrastructure providers around a shared settlement and privacy framework. The implications extend beyond individual integrations. Tokenization is shifting from isolated proof-of-concept environments into live production systems that support regulated securities, money market funds, repo instruments, and collateral markets. This transition requires infrastructure capable of enforcing policy controls, managing identity and permissions, and supporting complex regulatory requirements. Canton is designed explicitly for these conditions, and Fireblocks' support confirms that it meets institutional operational standards. Importantly, the scale of capital already flowing through Canton-aligned infrastructure demonstrates that this transition is not speculative. With over $178 billion active on the network via Broadridge alone, more than $8 trillion in monthly repo processing, and Fireblocks securing trillions in digital asset transfers annually, Canton is operating at institutional scale. This places it firmly within the category of financial market infrastructure rather than emerging blockchain experimentation. In conclusion, the February 3, 2026 announcement that Fireblocks has integrated the Canton Network for regulated Onchain settlement represents more than a technical partnership. It reflects a structural shift in financial market infrastructure toward institutional blockchain adoption. Combined with custody integrations from BitGo, tokenization deployments from Franklin Templeton, issuance workflows from DTCC, trading platforms from Temple Digital Group, repo settlement from Broadridge, treasury alignment from Theramune, and capital participation from BlackRock, Canton is emerging as a core settlement and privacy layer for regulated financial markets. This is not a retail-driven narrative or speculative thesis. It is an operational transformation occurring across custody, collateral, repo, securities issuance, and institutional trading workflows. The convergence of infrastructure providers and asset managers around Canton signals that blockchain adoption at scale is increasingly being driven by institutions designing systems for themselves rather than adapting public networks for regulated use. Fireblocks integration places Canton squarely within this institutional framework, reinforcing its role as emerging financial market plumbing rather than consumer-facing blockchain infrastructure. If you're getting value from this kind of focused, fundamentals-driven ZBEC content, make sure to hit the like button, subscribe to ZBCN today, and turn on notifications so you don't miss future updates. It directly supports the channel and helps this research-driven community grow. Drop your thoughts or questions in the comments. I read them all. Now, let's continue with the real analysis.